What is up? It is Big Chart Trades back with another video, and in this video I am going to be teaching you absolutely everything you need to know about inverse fair value gaps. Now, a lot of people use inversions, but they use them wrong and they don't even know it. So in this video, I'm going to tell you how and teach you how to not only use them properly, but how to use them most efficiently so you can add them into your trading. You can take the most effective ones, catch banger trades, and yeah, so with that being said, let's get right into it. I promise you in this video, you're going to hear some stuff that you probably haven't heard before when it comes to inversions. And then at the end of the video, I am going to be doing an entire backtesting session with you to show you the effectiveness of these inversions and how they work. So with that being said, let's get right into the video. So if we take a look at the screen right here, I have inverse fair value gaps. So this is going to be the structure of this video. First of all, let's cover which inversions are valid. So which inversions are valid? Okay. So here are traits of valid inversions. Okay. Obviously, the first one is manipulation. If you don't understand some things, I'm going to be breaking it down in this video with examples every single step of the way so you can just follow along with me. Okay. So first thing, okay, whoops. Which inversions are valid? When I say manipulation leg, I mean if this is the high, right, price sweeps that high, okay, this is the manipulation leg, okay? So the inversion has to be in the leg that sweeps the high, okay? That is what I mean by manipulation leg, okay? Let me do fair value gap and eat the manipulation leg, okay? Second thing, only one fair value gap in manipulation leg. Okay, so I see a lot of traders taking an inversion when there's more than one in the manipulation leg, and you'll see on the charts what I'm talking about. Okay, but basically what I mean by this is sometimes when you are waiting for an inversion to happen, that there are like two fair value gaps or three fair value gaps stacked on top of each other. Now that would make the inversion invalid. Okay, you must use the time frame where there is only one inversion on the chart. Okay, so in this scenario, like I just explained to you, there's one fair value gap here. That fair value gap gets inversed. That is a valid inversion. Okay. Okay. Next, out of a higher time frame PD array. Okay, or out of a liquidity sweep. Okay, so I see a lot of people taking random 1 minute inversions for no apparent reason. Okay, that is not valid trading. These are not valid inversions. The whole point of using an inversion is so you can pinpoint the protected high or protected low, because that is where your stop loss goes. For example, in this example right here, let's say we got that inversion, right? Your stop loss would go at the high because this is a protected high. That is the manipulation leg where there has been one fair value gap that gets inverse. This turns into a protected high. Same thing, vice versa, right? If we sweep a low and there's one fair value gap here, inverse it, okay? In a true bullish change in state, okay? That closure right there, your stop goes at this low. This low should hold up, okay? Just this high should hold up in a true bearish scenario up here or a true bullish scenario down here. Okay, these are two scenarios that happen every single day, and you need to be aware of where the protected high is, where the protected low is, what inversions are valid, what inversions are invalid. So this video is going to clear everything up for you. So out of a higher time frame PD array, okay, the inversion must happen inside of a 5-minute, 15-minute, hourly, 4-hour PD array. Okay, and you must align your time frames. Okay, you cannot take a 30-second inversion out of an hourly PD array. Okay, you can take a 30-second inversion out of a 5-minute, not out of an hourly. Okay, so when I say that, that typically looks like this. Okay, we have a 15-minute fair value gap. Price comes in, right? Price trades in. Maybe there was like a previous low here, right? Price trades into that fair value gap, comes down, sweeps that low. Okay, we have one fair value gap here. Price immediately displaces to the upside, inverses that fair value gap. Okay, on that candle closure, right? You enter, stop goes at the low, TP goes at the high. That is the model right there. Okay, So it has to be out of a higher time frame PD rate, has to sweep liquidity. Liquidity is the only thing that moves the market. You need to stop seeing the market as a bunch of candles. You need to start seeing the market as orders that are getting filled. The reason why liquidity sweeps work, the reason why they are effective, the reason why they move the market is because those are all orders getting filled. These are all buy orders that get filled once price comes down and sweeps that liquidity. Okay, fair value gap in the manipulation leg, only one fair value gap in the manipulation leg, out of a higher time frame PD rate, out of a liquidity sweep. And there was one more thing that I wanted to say. Oh, okay. Displacement. Okay. Displacement. Okay. There has to be displacement. Okay. An inversion is valid when it quickly inverses. Okay. So, like, for example, let's say we have a bunch of candlesticks right here. Okay. We have this right there. Okay. And then price comes down and inverses that, right? This is the inversion right here. Okay. And let's make this green so you can tell that it's an up close candle. Oh my God. Wow. I suck at drawing. Okay. Whatever. Green. Okay. This is displacement. Okay. You can see as soon as we swept that low, as soon as we put in this fair value gap, price came up and immediately on the first candle or second candle, immediately came up and inversed that bearish fair value gap. Okay. That is displacement. This is not valid. Okay. So let's say we have that same fair value gap. Okay. If price does this, we sweep the low, trade down a little bit, trade up a little bit, reject off of it, and then we inverse it. Okay. This is a very low probability inversion. Okay. The highest probability inversions have very quick displacement through the fair value gap. That is incredibly necessary, incredibly important. You need to make sure there is displacement. You need to make sure that there's only one fair value gap in the leg, and it has to be out of either a liquidity sweep or higher time frame PD rate. It's even better when it's out of both at the same time. Okay, so those are all valid inversions. Okay, so now that we covered that, okay, we are going to be covering, okay, which inversions are invalid. Okay, this is important. Okay, and you guys should be either screenshotting this, writing this down, because it is incredibly important that you remember which inversions are improbable, invalid, etc., etc. Okay, okay. When price consolidates instead of displaces. Okay, so like I just explained to you in this example, when price does this instead of displacing through that fair value gap, okay, that is, what the hell is going on? Somebody's calling me. Okay, that is an invalid inversion. Okay, price cannot do this. It has to displace right through. Okay, another invalid inversion. Okay, and there is more than one. Okay, so in a scenario like this, okay, let's say price is trading to the downside. Okay, boom, boom. Okay, boom. Why can't I draw? Okay, so price sweeps a low, right? Let me just, okay, so price, bro, why am I so special? I'm like special needs right now. Okay. Okay. So when price sweeps a low, and there are multiple fair value gaps, there's one here, right? There's one here, right? There's one here, okay? And there's one here, okay? This is invalid, okay? Because we need a displacement. And if we close above this fair value gap, there is this one, and then this one, and then this one. This is invalid, okay? So unless price closes through all of them, which I still wouldn't even take because it needs to be a single fair value gap in the leg, okay? This is a huge stop loss. So there must be one fair value gap in the leg. It must displace through it, okay? That is the only place, that is the only time where an inversion is valid, okay? When it is not out of anything. Okay, so a lot of people will just take, and maybe you're a culprit of this as well if you're a new trader, okay? Maybe you see price doing this, right? And then like maybe there's an inversion up here, okay, and price trades up, and we're just doing nothing here, and then price inverses that, and then like you go long there, and then like you go long on the closure and you put your stop like randomly here and then your TP randomly there. Okay, that is invalid. Okay, it needs to be in the manipulation. Okay, you cannot just take any random inversion. That is not how it works. Okay, that is not how it works, and that is going to mess your trading up. It's going to ruin your psychology, and it's just not. An inversion is a reversal. You are essentially catching a reversal. Okay, when people say a continuation inversion, okay, it typically means when there's a situation like this, right, on the higher time frame, right, like maybe on a 5 minute, right, we have a fair value gap, and then we drop to a lower time frame, price comes in, right, we inverse this straight up and get okay, and then you can take that on the closure, right, up here, stop loss goes at the low, right, TP at the high. Okay, that's a continuation, but it's still essentially on the lower time frames is a reversal. Okay, that is what an inversion is. It is a reversal. Okay, now let me X that out. Okay, these are all invalid situations for inversions. Okay, you must not take inversions if there is no displacement, if there's more than one fair value gap in the leg, when it's not out of anything. You have to stay away. You cannot just take any random inversions on the charts. Okay, now I'm going to cover, and this has a lot to do with what I just explained. Okay, mistakes most people make when trading inversions. Okay, I basically just explained this, but essentially, okay, take any, they take any inversion on the chart. Okay, take any inversion on the chart. They take any inversion on the chart. They take inversions when there is more than one value gap in the manipulation leg. They don't wait for the manipulation leg. Okay, and that's something that a lot of you guys do that I really want to touch on. Okay, so a lot of you guys will see something like this, right, where we have a fair value gap. Okay, let me draw it. We have a fair value gap and price does this, right? Make a low. Okay, you guys, instead of waiting for this low to get swept, what you guys will do is you'll just wait for price to trade back into the fair value gap and then you'll take that inversion, right? And that's invalid. This is not a manipulation leg. It must be in the manipulation leg, if you get what I'm saying. Okay, so that's another mistake a lot of people make. Okay, and they try to predict the candle closure. Okay, so what a lot of people do is they're so impatient, instead of just waiting for the candle to close and taking the entry, what they do is they'll try to predict the candle closure, right? Instead of waiting, they'll just prematurely enter the inversion. Okay, so it's if price is doing this, right? If price came down here, right, we have this fair value gap. Instead of waiting for this, what they'll do is price will be doing this, right? And then they'll be like, and then they'll get like a random closure here, right? The next candle will open. And since it was close to inversing it, they'll take their entry at that closure, even though it didn't inverse it. Okay, a lot of people do that. And that is horrible, horrible. You must have the patience to wait for the closure. You need the confirmation. The whole point of inversions is for confirmation. You need to confirm your position. You confirm that the market is changing directions, confirming the break of structure, etc., etc. Okay, do not predict it. Okay, you have to wait for it. All right. Okay, tips on how to only take the best inversions. I basically just explained that to you. So now what I'm going to do is I'm going to be hopping into the back testing. Okay, and we're going to be back testing inversions, and I'm going to show you guys everything you need to know for taking proper inversions so you guys can do it properly starting today. All right, guys, I have the TradeZilla backtesting pulled up to show you guys. So what we have here on the 15-minute is this 15-minute fair value gap, as you can see right there. And on the 5-minute, we have a very beautiful inversion right here. As you guys can see, this is the inversion out of a 15-minute fair value gap. Okay, and how is this valid? Why is this valid? As you can see, right, we sweep this low. Okay, this is the manipulation leg. And what do we have? We have a single fair value gap in the manipulation. Okay, if we go to any other time frame, there are no other fair value gaps right here. A lot of you guys, going back to the mistakes that you guys would make, is a lot of you guys would take this inversion right here, and this is completely invalid. This is the manipulation leg down here, not this. And right, there are multiple, right? If you're going to take this one, you might as well take this one up here. So we do not take those types of inversions, right? We have to have the checklist, okay? Manipulation leg, one fair value gap in the leg, quick displacement to the upside. Okay, what do we have? Manipulation leg, one fair value gap in the leg, quick displacement for the upside. So in this scenario, what would I do? I would wait for a retracement. So let's drop down to the lower time frame and wait for a retracement. Okay, we just get the retracement right there. So at this point in time, right, we could go long there. Okay, we are still in that 15-minute gap. We have the inversion. Stop goes at the protected low, which is right here. And TP goes at the high, which is right there. And as we can see, let's see what happens. Price goes ahead and takes the TP. Now, hopefully all of you guys understand why this is a valid inversion. Now, let me show you another example so you can understand further. Okay, so in this example, we can see this hourly fair value gap right here, or hourly BPR, as we can see, and we see this leg that pulls into that hourly fair value gap. Now let's drop down to the lower time frame and see what we got. As we can see, we have this manipulation leg right there, and we have this little fair value gap inside that manipulation leg. Once again, this is a 5-minute, right, inversion. As you can see, hasn't inversed yet, but we sweep that liquidity. We have a single fair value gap in the leg. There is a quick displacement after we sweep that liquidity. So this looks like a very nice inversion setup right here. As you guys can see, just run through this checklist every single time you take inversions. Okay, if we just skip a little bit, that is the inversion right there. We sell short there. Stop loss goes at the high. TP can be at the low right there for a basically 1-to-1 hour trade. Now let's see what happens. Price goes ahead and takes that low. Now, that is another example of a perfect inversion that you could take on a daily basis to become more profitable. Now, let me get into another example right now. Okay, coming over to our third example, we can see this 15-minute fair value gap right here that price has pulled into. Now, if we go to the 2-minute time frame, as you can see, this is the manipulation leg right here. Right, let's see what happens. Price comes down and resweeps. Okay, so that is the manipulation leg right here. Okay, let's see if we get an inversion on the 1 minute. We have a beautiful inversion right here. Let's see and wait for price to go ahead and close above that. Okay, so price closes above it. Do we get a retrace? We do not get a retrace. We would enter long there. Stop loss goes at the protected low. Okay, remember the checklist, guys. Single fair value gap in the manipulation leg, boom, boom, check. And we could set our TP all the way up to this high if we wanted to, right? We can go break even at this high right here, just for the shits and giggles. Let's see what happens. As you can see, price rips there. So we go break even and price goes ahead and takes our final TP. And that is a beautiful trade right there. But you see that inversion, single fair value gap in the leg on the manipulation leg. If you do this every single time, I promise you it will help you more than anything else. Now, let's get into another example because I want to show you guys mistakes that a lot of you guys make, which could fuck you up. And right here is one of them, just from looking at this chart. Okay, a lot of you guys take random inversions. Okay, so for example, right here, you might see this 5-minute inversion right here that's not on the manipulation leg. And you might be like, okay, I missed my entry. A lot of it comes from, oh wait, why did it not? Whoops. Wait, I don't want it to fuck up my order. Whatever. I'll just skip. I don't care. Whatever. Just delete the session orders because I want to show you guys this example. Okay. Close the position. Okay, so right here, a lot of you guys might have missed the entry down here and you're like, oh shit, I want to catch this trade. So I'm going to take this inversion and I'm going to ride it up to the high. And then I can just do a 1-to-1 right here, right? Okay, obviously, whatever. Some people actually do this shit. Now take a look at this, right? You try to do that. What happens? You hit your stop. I honestly thought that took TP. No, you hit your stop right there. Okay, because that is not valid. You see how this inversion down here, okay, this inversion, this is the manipulation, okay? You are chilling down here. You're chilling, okay? Up here, that is invalid. You cannot take an inversion like that. Your inversion must trade into a higher time frame PD array or liquidity sweep. Single fair value gap in the leg has to be the manipulation leg. Okay, has to be displacement. That is a valid inversion. Okay, an invalid inversion is anywhere in the range. That's not that. Okay, if it consolidates before inverses, that's invalid. Okay, this is, I promise you, if you follow this, this is the only inversion video that you are going to need. All right. Actually, though, like 100%. I promise you, if you follow, this is going to be the last inversion video that you're ever going to need to watch, because this is all you need. This is literally the playbook. So with that being said, if you enjoyed this video, let me know in the comments below. Leave a like. Also, let me know how you feel about me making these types of videos. I appreciate all of you guys for watching this video, watching the whole way through, being there. If you want to support me, just subscribe and like the video, leave a comment. Go follow me on my other socials. I'm going to be posting way more videos like this going forward. Use code CHAR on Alpha Futures for 10% off. And Apex is currently running an 80% off sale and $40 PA fees. So you can essentially get 20 accounts, 20 50K accounts for $740, which is amazing. So with that being said, have a great rest of your day, and I will catch you in the next one.